Hello, this is Andrew Palladino here, and I'm here to go over the golden fib ratio modified version that was created for TradingView. This is slightly different from the one implemented in MT4. The main difference is the ability to take entries in a direction of a longer time frame trend. Sorry, a longer trend specified on the given time frame. In this case, I am using two moving averages to qualify that trend, the 13 EMA and the 34 EMA. So as long as the 13 and the 34 are stacked in the positive direction and pointing upwards, it will only take longs, and vice versa. If we have the 13 and the 34 EMA stacked in the negative direction, it will only take shorts. Okay, so that's pretty much one of the biggest differences between this version and the one in MT4. Also, this is a strategy, so it will actually give you long and short entries right on the chart. I'm going to go through the inputs here, and as I'm going through the inputs, I'll explain the strategy in a little more detail. So the most important input is, well, you have the 13 and the 34 EMA periods, okay? So you can change those to anything you want, but the most important input is the minimum swing percentage. So what this does is it limits the swing from which the fib retracement is based on to be at the very least a certain percentage, okay? So in this case, it's set to 0.5 for the 4-hour chart on a US dollar Canadian pair. This is going to change. If you're trading the 5-minute chart, this will not work. You will not see any trades on the 5-minute charts, or very few trades, because the swings on a 5-minute chart are much lower, okay, in percentage wise. So that's pretty much the parameter that, along with the target and the stop loss, that is the parameter that needs to be changed depending on which pair and time frame you're looking at. So let me define a swing. So that you have these fractal highs and lows marked by triangles, okay? And the swing is basically the distance between in this case, the fractal low, okay, which is this point, all the way to the fractal high, which is that point. So that cyan line is displayed as soon as price drops below the 61.8% retracement. So that cyan line represents the 61.8% retracement line. So you will see the candles colored differently. Okay, in this case, because we're long, the candles are colored blue, and you can change all this in style. I'll show you how. Go to you click on properties, go to style, and you can change all the colors. You can make them. You can change the moving averages. You can do anything you want. You can disable some of the moving averages. You won't see them, but the strategy will still be based on those moving averages. So back to the entry here. So the candles will start changing blue as soon as they breach this level. And the entry is taken as a buy stop at that level. So when the candle travels through that price, it will take a position. In this case, the stop is set to 50 pips, 0.005, and the target is set to 200 pips. So in this case, we entered along and we took profit up here. Let's measure this just to make sure. Yep, that's 200 pips right there. Now, if we there's another feature that is that can be turned on, and which I like a lot, is this activate trailing stop. So what that does is it will activate a trailing stop where you click on that, and let's say we're going for 500. Let's say we're going for 300 pips. Okay. So I activated that trailing stop, and this is what happens. Okay, it still took profit at 300, but look at our stop. See, it's ratcheting up. Okay, so the way this works is as follows. As soon as we enter a trade, this initial stop will be kept for 20 bars. After the 20th bar, the initial stop is overridden by the lowest low of the last 20 bars. So in this case, if we zoom in a little bit here, the lowest low is this candle. Okay, and as that value changes, the stop changes as well. It's just a great way to capture, a trend. So obviously we hit the 300 pip mark here, so it didn't really make any difference. Well, let's make that 400 pips and see what happens. There we go. So the target was way too high, and we got stopped out on this candle right here, right on the trailing stop. So we were able to capture the majority of the trend using a trailing stop, which is nice because it usually coincides with a trend reversal as well when you're trailing a 20 bar high, 20 bar low in this case. Now everything that we've talked about on the long side applies on the short side as well. So let me just disable this for a second, and let me talk about an additional property which is important. This enable trade direction. Currently it's set to 0, meaning it will take both long and short trades. If you want, you can take long only trades, so it will only take long trades by setting this to 1. Okay, and it will only take short trades by setting this parameter to -1. As you can see, our long position disappeared. So I'm gonna keep that. I'm gonna go short only for here, and I'm gonna show you a trade in the short direction. Okay, so in this case, we had a short position initiate here, which is the 61 fib retracement level of this swing from high to low, and we entered the position and we did not get stopped out. We hit our target way down here. Now let's do this again. We come here and we're going to enable the trailing stop. So if we enable the trailing stop in this case, okay, we would have captured this amount. Okay, so here is one more property that isn't really important. I mean, all these are important, but this fib retrace max bars. Okay, so what this does is this relates to the retracement. Okay, so as soon as we get a retracement below that fib level and we're waiting for an entry to trigger, there is a maximum number of bars that can take place in that retracement. So if it goes above 10 bars, so if we get a retracement that is longer than 10 bars, it will invalidate that trade. It will cancel that buy stop for a long or sell stop for a short. So that's what this parameter does. So that's pretty much it. Let me just go over the strategy tester, because this is kind of a cool little tool that you can use to, you know, tweak your inputs a little bit so you get the right number of trades, or the total number of trades you're interested in capturing. So trade frequency and obviously, you know, profitability too. And I could say that I'm optimizing a little bit here, but you know, it allows you to pick inputs that are reasonable. Okay, you're not always going to have a great looking equity curve. Okay, but it allows you to pick reasonable inputs. So let me show you one thing that I do. Is the first thing I do is I actually play around with the target and stop loss. Okay, so currently it's set at 400 pips. Let me turn off the trailing stop. Okay, and let me set this to buy and sell. So if we were to drop that to, let's say, 200 pips, okay, the equity curve doesn't look that great. All right, well, 200 pips is probably a low probability target. So let's drop it to 100 pips. That looks pretty good. So we have a 2-to-1 reward to risk ratio. The equity curve looks a lot better here. Let's drop to 50 pips. Now we have 1-to-1 reward to risk, and that looks like a really good equity curve. Okay, so what I'm doing here is I'm just picking a high probability target and going with it. And if I get enough trades and my profit factor looks good, you know, those are the settings that I'm going to use. And yeah, I mean, I'm optimizing a little bit, but you got to do that a little bit in order to get the right settings, in order to get the total number of trades. I mean, not all pairs are going to look this clean, but this is something that you're going to have to play around with a little bit until you're comfortable with settings that are reasonable to you. So this is pretty much it. This is the TradingView Golden Fib ratio strategy.